Good morning and welcome to Morning Markets from True Potential. Today we'll focus in on key economic data and how asset markets have performed over the past 24 hours. So just looking at asset markets firstly and then equities within that, what did we see yesterday? We saw just markets continuing to move modestly higher over the course of the day. Probably a stronger performance coming through in US markets as the day moved on. If we look there, we look at the Nasdaq probably up around 90 basis points in the day. Compare and contrast that with Europe and the UK, where we saw markets up about 0.2% over the course of the day. Sector level, very much in European markets, financials and travel related areas that seem to provide a bit of the strength, alongside those companies that are reporting results. Looking into the US, strength there continued to be evident in the small and mid-cap area, a theme that we discussed last week, so that continues to be evident with the Russell 2000 outperforming the broader market as well. Sector level, maybe not the same sort of moves as we saw in Europe. Very much energy, consumer discretionary, technology actually provided one of the stronger performances in the US as well yesterday. Just in other asset classes then, not really a lot of change to discuss. A very quiet start to the week yesterday. In terms of currencies, we've seen the dollar marginally weaker on a trade-weighted basis. Sovereign bonds, yields really little changed. In the US, we have the 10-year at 1.57. We did have two bond auctions yesterday at the 2 and the 5-year maturity, both of which passed off without any event, and so it builds on the momentum that we've seen over the past number of weeks of good and well-demanded bond auctions in the US. I think the other thing in the UK, yields, the UK 10-year gilt at 0.75, primarily unchanged in the day. Just worth noting that in the context of some of the data points that we've been getting from the Debt Management Office, who issue gilts in order to finance the requirements. If we look there, they put out a note on Friday reducing their expectation of the amount of gilts that would be sold this year from 295 billion down to 252 billion. So remains a very large number, both in absolute terms and both relative to historical issuance levels, but it speaks to the challenges that are seen at this point in time and the need to raise financing in that way. Interesting just that we didn't see much of a move in the gilt market on the back of that. It is reduced supply, but then today we do have a bond auction for gilts that are maturing out in 2051. So be an interesting data point to touch on tomorrow as to how that auction goes today. Commodity markets, very much a similar theme to that what we've been discussing. Industrial metals continue to be very well bid in the market and continue to appreciate in price. Also, agricultural commodities as well continue to see robust price increases coming through. Just on the data front yesterday in the US, we durable goods order again increasing there on a month-on-month basis. If we X out that more volatile transport area, we saw durable goods orders about up 1.6%, in line with forecasts there. So that, coupled with what we'll get on Thursday in terms of the GDP report for the first quarter, just continues to indicate that robust situation that there is in the US, a combination of the fiscal stimulus continuing to work its way through and also the investment plans there coming to the fore as well in terms of those durable goods orders. Just in Asia overnight, we've had South Korea report first quarter 21 GDP figures up 1.6% quarter on quarter. I'm not looking at the year on year numbers purely because they're skewed by the base effect from last year. More important to think about that quarter on quarter improvement. That very much evident in that number, up 1.6%, coming in a little bit ahead of expectations. Big drivers in that, investment and also consumption. So ongoing international recovery, supporting South Korea from a trade perspective, but also starting to see the domestic economy come in there as well. So a strong performance coming through. Japan, we've had the Bank of Japan meeting, no changes as expected to policy decisions, their quantitative easing programme or yield curve control. Continue to want to get inflation to around 2% before they would enact any changes. That is a challenge. We know that from a Japanese historical context, but even if we look at this Bank of Japan's own forecasts for inflation over the coming years, quite noticeable where that is. We're a long way from the target, with 0.1% expected for this year and 0.8% for next year. In terms of this year's inflation number, it was actually revised lower, so a very challenging inflation backdrop there for Japan, and I suppose presents an interesting contrast to what we've discussed from an inflation perspective globally. I'll leave it there, just looking to the day ahead. Lots of company results will be important drivers for equity markets over the course of the next 24 hours, and we'll come back and discuss those tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.